Welcome to the Australian dollar to Japanese yen analysis report for September 22 to 27, 2025. This comprehensive analysis will provide you with key market insights, technical analysis, and trading strategies for the Australian dollar against the Japanese yen. Let's dive into the details. Welcome to our comprehensive analysis of the Australian dollar versus Japanese yen currency pair. In this presentation, we'll examine the Australian dollar to Japanese yen performance from September 22 to 27, 2025, providing you with key insights into recent price action, technical indicators, and trading strategies. The Australian dollar to Japanese yen pair has shown resilience during this period, influenced by stronger than expected Australian inflation data and signs of slowing in the Japanese economy. Whether you're an active Forex trader or simply monitoring currency markets, this analysis will help you understand the current market dynamics and potential future movements. Let's dive into the details of what's been driving this important currency pair and where it might be headed next. Looking at the current market data for Australian dollar to Japanese yen, we can see the pair is trading at 97.883 Japanese yen, showing a slight daily decline of 0.09%. Despite this minor pullback, the pair has maintained positive momentum across multiple timeframes, with a 5-day gain of 0.32% and a monthly increase of 2.09%. The day's trading range was between 97.732 and 98.038, indicating relatively contained volatility. What's particularly noteworthy is the substantial interest rate differential between these two economies. Australia's interest rate stands at 3.6%, while Japan's remains at a mere 0.1%. This 3.5% differential continues to make Australian dollar to Japanese yen an attractive carry trade for investors seeking yield. The price chart on the right illustrates the steady upward trajectory of Australian dollar to Japanese yen since late August, with the pair maintaining levels above key moving averages. This technical strength, combined with the interest rate advantage, provides a solid foundation for our analysis of future price movements. Turning to our technical analysis, Australian dollar to Japanese yen is showing mixed signals across various indicators. The RSI currently stands at 60.27, indicating moderately bullish momentum but not yet in overbought territory. Meanwhile, the MACD at -0.42 and its signal line at -0.45 suggest slight bearish pressure in the very short term. A key bullish factor is that the price remains above the 55-day simple moving average of 96.46, which typically signals an overall uptrend. Looking at our action bias analysis across multiple timeframes, we see a consistent upside bias from hourly charts all the way to weekly timeframes, reinforcing the underlying bullish structure. On the chart, we've identified critical support and resistance levels. The immediate resistance sits at 98.35, with a secondary resistance at 98.60. On the downside, immediate support can be found at 97.28, with a major support level at 96.31. These levels will be crucial for determining potential entry and exit points for our trading strategies. The recent price action shows consolidation after the upward move, suggesting the market is deciding its next directional move. Several significant market events influenced Australian dollar to Japanese yen during the week of September 22 to 27. On September 25, Australian CPI inflation data showed a rise to 3% year-over-year, exceeding forecasts and up from July's 2.8%. This higher-than-expected inflation reading reduced market expectations for RBA rate cuts, with the probability of a November cut dropping from 70% to 50%. On September 24, Japan released its PMI data for September, with the composite index hitting its lowest level in 4 months. The manufacturing PMI fell to 48.4, the lowest since March, indicating contraction in the manufacturing sector. This data pointed to slowing Japanese economic activity, putting downward pressure on the yen. Additionally, on September 26, Tokyo CPI inflation eased to 2.5% year-over-year, suggesting moderating price pressures in Japan. This reduced expectations for immediate hawkish action from the Bank of Japan, slightly weakening the yen. The chart shows how Australian dollar to Japanese yen responded to these events, with notable price movements following each data release. For the short-term outlook over the next 1 to 2 weeks, we expect Australian dollar to Japanese yen to trade within a range of 96.50 to 98.40. Our analysis suggests a slightly bearish bias in the immediate term, with a 60% probability assigned to the downside scenario and 40% to the upside scenario. In the bearish scenario, we anticipate that failure to break above the 98.00 level could trigger a move down to the immediate support at 97.28. If this level breaks, we could see further decline toward 96.50. This scenario is supported by technical resistance, potential profit-taking after recent gains, and the possibility of hawkish commentary from Bank of Japan officials. The bullish alternative would be triggered by a decisive break above 98.00 on a daily close, potentially pushing the pair toward 98.35 and possibly 98.60 if momentum continues. This scenario would be supported by positive Australian economic data, continued weakness in Japanese indicators, and positive global risk sentiment. The chart illustrates both scenarios, with the red line showing the bearish path and the green line representing the bullish alternative. Looking at the midterm outlook for Australian dollar to Japanese yen over the next 1 to 3 months, we project a wider trading range of 95.60 to 100.00. Unlike our short-term view, our midterm bias leans bullish, with a 60% probability assigned to the upside scenario and 40% to the downside scenario. The bullish scenario would be triggered by sustained trading above 98.35, potentially leading to an initial move toward 99.17, with the psychological 100.00 level as the ultimate target. This scenario is supported by the substantial interest rate differential of 3.5% between Australia and Japan, seasonal strength typically seen in the fourth quarter, and the relative stability of the Australian economy. Conversely, the bearish scenario would be activated by a break below 96.31 on a weekly close, potentially pushing the pair down to 95.60, near the 200-day exponential moving average. This scenario could materialize if the Bank of Japan proceeds with a rate hike in the fourth quarter, if the Australian economy shows signs of deterioration, or if global risk sentiment turns negative. Key factors to monitor include the policy divergence between the RBA and BOJ, Australian inflation and employment trends, the pace of Japanese economic recovery, and global risk sentiment. Based on our analysis, we've developed specific trading strategies for both short-term and mid-term horizons. For short-term traders looking at the next 1 to 2 weeks, we recommend a range trading approach, selling near the 98.00 to 98.35 resistance zone and buying near the 97.28 to 96.50 support zone. Alternatively, breakout traders can look to buy above 98.35 with a target of 99.00, or sell below 97.28 targeting 96.50. For these short-term trades, we suggest stop losses of 50 to 70 pips from entry to account for current volatility levels, and position sizing limited to 2% of total capital per trade. For midterm traders with a 1 to 3 month horizon, we maintain a cautiously bullish bias with a focus on buying dips. The key entry zone is between 96.31 and 96.50 for long positions, with target zones at 99.00 to 100.00 for profit taking. For these longer-term positions, wider stop losses of 80 to 100 pips are recommended. Looking at risk-reward ratios, our short-term range trading strategy offers a 1 minute and 1.5 seconds ratio, while the mid-term bullish strategy provides the most attractive ratio at 1 minute and 2.5 seconds. This means that for every pip risked in the mid-term strategy, the potential reward is 2.5 pips. To summarize our Australian dollar to Japanese yen analysis for September 22 to 27, 2025, the pair currently displays a neutral to slightly bearish short-term outlook, while maintaining a more bullish mid-term perspective. The substantial 3.5% interest rate differential between Australia and Japan continues to make this pair an attractive carry trade for investors seeking yield. Recent Australian inflation data, which came in higher than expected at 3% year-over-year, has reduced expectations for RBA rate cuts, providing support for the Australian dollar. Meanwhile, Japanese economic indicators, particularly the manufacturing PMI falling to 48.4, suggest a slowdown that could limit the yen's strength. Key risk factors to monitor include potential hawkish commentary from Bank of Japan officials following recent dissenting votes for rate hikes, any deterioration in Australian economic data, particularly labor market figures, and shifts in global risk sentiment that could affect carry trade dynamics. Our radar chart compares short-term and mid-term outlooks across various factors, illustrating how the mid-term perspective shows stronger readings in most categories, particularly in fundamental support and momentum. Thank you for watching our Australian dollar to Japanese yen analysis. We hope you found these insights valuable for your trading strategy.